Welcome everyone to the Realty Debate of this week. Today we will focus on our attention on an important source of funding for the real estate sector, that's private equity or PE funding. In 2011, real estate topped amongst the sectors which received PE funding in the country. In 2012, the picture is looking grim. The deal sizes have changed, the deal structures have changed, and the player's profile is also changing. So, PE investments in real estate, the changing phase, is what we will get deep into. And as always, we also have a consumer-focused discussion. We've been getting questions from many of you on the merits and pitfalls of investing in commercial real estate. In the second half of the debate today, we'll get you the landscape of commercial real estate across India and run you through the basic do's and don'ts of commercial real estate investing. Let's begin the debate on PE funding for real estate sector with our panelists, Sunil Rohokale, MD and CEO of ASK Group. Also, for a developer's perspective, Sunil Mantri, Chairman, Sunil Mantri Group. Om Chaudhary, CEO Fire Capital Fund in our Delhi studio. And Sameer Jasuja, CEO and founder of Prop Equity. Gentlemen, thanks very much for joining me here today. I'm going to just read out a couple of graphics which basically tell you the data points on what we're going to be talking about. Now, if you look at 2011, we came out of the subprime crisis and the numbers looked good. PE investments, $2.68 billion of real estate investments through 53 transactions. Real estate attracted the largest PE funding amongst all sectors across the country. In 2012, what's the picture looking like? It's looking shaky. Private equity real estate firms made 12 investments amounting to about $477 million across 10 deals. These were the disclosed values during the quarter ending March 2012. The pace of investments, and this is an important one to see, during the quarter was less than half of that during the same period last year, which actually saw 28 investments in 2011, same quarter. Look at this number, $1,523 million being invested across 26 deals with disclosed values. This was January to March investments are also lower compared to the immediate previous quarter, which saw a closure of 18 deals. In fact, if you look at the private equity real estate investment volumes, they have decelerated for the fourth consecutive quarter, that's Q1 12. So I'm going to first, of course, ask Om this question. What's going on, Om? I mean, we look like we just come out of the subprime crisis. Real estate looked very good if you looked at PE investments in 2011.
No, real estate, I would say, Manisha, continues to look good. It's just, it's everything relative. So you look back, at the heady days of 2006 through 2009, and even in 2012, 11, like you said, we came out of the crisis looking good because of nothing else but belief in the Indian economy and belief in the fundamentals of real estate, particularly residential. Now, the commercial side of real estate is starting to look a little, impacted by the cyclicality, but residential continues to look good. So that's what has kind of held Indian real estate through. We shouldn't forget that private equity opened up for the real estate sector. Real estate was the most closely guarded bastion only in 2005, and 2006 is when funds actually started, and we saw a deluge in a sense.
Figures are saying that $5 billion is ready to exit in 2012.
Yes,
that's the basic figure which is floating around.
That is the figure that ought to exit because, it's kind of, the math is done on what monies came in, what IRRs are expected, and therefore 2012-13, what amount of
So as a PE investor, you're saying that it still looks attractive. The sector is looking attractive. The numbers aren't telling an entire story then, because 2012 beginning, the slowdown that you see. So I'm going to come back to you. Let me just get Mr. Rohokale's opinion here. Mr. Rohokale, I mean, has, the environment itself has changed. Though if you look at the January to March quarter, today we look at the environment and say, look, Eurozone's looking shaky. There are problems with the Indian economy. But January to March, you actually saw Indian equity markets notch up 12%. It was a very, very good period. And there was a little bit of robustness and positivity in the air. Why are the numbers in real estate looking so grim at the beginning of this year?
Yeah, I think real estate attractiveness remains intact But I think the important aspect is that for the private equity real estate, the fundraising has to happen, which is domestically as well as internationally. I think whatever dry powder the industry had since 2005, 6, 7 and 8 got completely dried up due to investments into various segments of real estate and different cities and different geographies in the country. So I think if you really look at the fundraising program post the global crisis by the domestic funds, to my mathematics, it's not crossing even $1.5 billion. And at the same period, if you look at the private equity players who raised money globally for Indian real estate, is not even crossing $1 billion. So I think the total quantum of money available with private equity players to be deployed, even though opportunity is great, is actually a big question mark. That's first aspect. The second aspect is, I think, the risk involved into Indian real estate and the perceived returns. I think there is amount of agreement is yet to happen. Even though the sales are slow, even though the banks are also charging a higher risk premium for the real estate lending, and same is the story with now NBFCs lending to real estate industry. I think private equity as an instrument and private equity as a vehicle for a growth or deleveraging, I think, and returning the risk-adjusted returns to the private equity is yet not completely established to my mind, so that it becomes little.
Who really gets affected by the entire sources of fund story? I mean, whether it's banks, which already have been told by RBI charge a higher premium because this is a risky sector to invest in, private equity or even NBFCs. So sum up for us the environment that you see on private equity investments into your sector. Are the deals coming, but they're coming far more stringently structured because of the high risks perceived?
Yes, I think we were having great hopes on private equity players that huge quantum of the money will come at a reasonable cost. Unfortunately, the expectation of the private equity player for getting the return on the investments are very, very high. They expect sometime 25% to 30% rate of the return, which is very, very high. That's the first problem. Secondly, really they don't invest in the risk of the company. That's an equity investment which the government of India or the Reserve Bank was contemplating, that whenever the foreign player is investing in the company, he's sharing the risk as well as sharing the benefits of the fruits of the benefit if anything is happening. I think most of the private equity deal which currently are happening, they are more or less structured deal where the fixed ROI, return on the investment, is fixed irrespective whether developer makes profit or not. A time frame is given which is also a very short. Usually they expect 3-year exit, which is very difficult in most of the time in the real estate sector. So that's the second problem. Third, they need all the permits to be in place by the time actually you can start the project. That time they want to enter. So you have a big question: who will invest for the land money, who will invest for the premiums payment to the municipal corporation or the state government. So technically, by the time you are ready to start the project, that time they want to enter really doesn't help the developer to complete the project, because then developer prefers to go for a bank funding option, which is currently available between 13 to 15% price tag, and NBFC option, which is available between 17-18% to 20 or 22% price tag.
India's #1 news app just got even better. Download NDTV's new app. Fully optimized for retina display. Full screen view. Faster response time. And Sudoku. NDTV's new iPad app. Download now.